Danielle Shay, VP of Options, Simpler Trading, back with us once again after a long weekend last weekend. Hey, you get a long weekend again next weekend as well. I mean, we do too, but it's this weekend. Anyways, it's been a mess in the retail sector, to say the least, this week. I mean, we never really like to trade in hindsight here, so let's maybe approach this from how could we have maybe seen some of these moves or taken advantage of some of these moves as traders in real time. You know, you never want to see a Walmart do what it did 2 days ago, but I mean, pretty amazing moves right across the board. Is there one or two maybe that, you know, stood out to you going into the reports as potential targets and potential big movers as they were?
You know what took me so by surprise this week is, I mean, I've been literally shorting like pretty much everything on earnings. I've been primarily focused on a lot of the, ARC names and a lot of the names that just rallied so hard last year and the year before. And I'm going to be honest here, this Walmart and Target move, I mean, it took me completely by surprise. I went into this week after having a long weekend. I was on vacation. I wanted to remain pretty flat because I went to Legoland, by the way, which was great. I really missed all of you though. And so I went into this week pretty flat because I thought, this is basically the last shot that the market has is retail earnings. If retail earnings can come out and say, hey guys, inflation's not that bad, we've got it under control, then I thought that could have been the catalyst to send the market higher. So when you're saying, looking back, could you have seen it? I mean, everything that I look at stats, I look at the previous earnings reports. I would not have seen this bad of a result from Walmart and Target. Some of the others have been pretty obvious, like Teladoc, but not this one. So I think the best thing to do with complete shockers like that is trade them after the fact. I mean, Walmart is still falling. So I would just day trade them after they get hit, because once people realize that the situation is that bad, they're just going to keep going down.
So let's do that then. Let's approach this from the other side of the spectrum here. As traders, we always like to look for opportunity. I mean, those moves were like, you got to go back to Black Monday, like 1987 for, comparable single day moves. Now we're getting into levels we haven't been at in months and in some cases years on many of these. Where do we go from here? Is there the potential for maybe a quick kind of bounce trade?
I'm not looking for bounces on these names. I'm going back and I'm looking at pretty much where they were prior to the pandemic, or where they were, right around March 2020, April 2020, because a lot of these stocks are giving back their gains all the way until that time. So honestly, I'm starting to target those areas on a higher time frame. As far as where do we go from here, I'm sticking with my regular plan. I'm looking for companies that rallied way too hard throughout 2020, 2021. It's a lot easier if you pick the companies that are still losing money, because the market has no tolerance for that right now. And any of the ARC names, like for example, we have Zoom next week. Zoom is one of the ones that's on my list for a potential destruction candidate. I think that traders, we have to be aware of the fact that at this point, this disease of stocks getting hit like Black Monday is not limited to stocks like Teladoc. So I think that we need to be very cautious, because now, the large caps are getting completely creamed. But I think what you do is you either A, decide you want to trade it before earnings, if it's something like I noted that has a higher probability of falling, or B, just wait until after and trade the post earnings move, because that's where all the moves are right now.
All right, so let's look ahead to next week, the big one in the retail space, that is. I mean, you mentioned Zoom as well, but Macy's set to report coming up on the 26th. M up 3% today, huge move down yesterday, obviously. What are you looking at it, first of all, and what do we do with Macy's going into earnings?
So, I think as a general rule, it makes sense to just look at retailers to the downside, just due to all the issues that the companies that have already reported have noted. But I'm going to tell you that with Macy's, it's a little bit strange, because looking at my charts here, this company has actually traded higher on earnings for the last 5 quarters in a row, which just completely shocks me, because I thought malls, were a dying breed. I'd never go to Macy's. I haven't gone there since I was like 16 years old. So I'm a little surprised at this one. And because of the fact that it's already tanked so much, I actually wouldn't short this, because they've done well the past couple quarters. For me, I would just sit and wait on that one. There is one that's coming up next week, which is going to be, let's see, Petco. So for this one, I would be more likely to short that one because it's a recent IPO. The recent IPOs have seemed to do a lot worse than some of the more stable companies. So I would actually pass on Macy's and look at Petco because it's trading near the lows. It's a $15 stock. It's fallen on earnings, 3 out of the 5 quarters. So that one seems like a higher probability for me to short before earnings.
We happen to have a graphic for that, but anyways, yeah, no, an interesting look for it. I said it felt like Friday around here already, but it's not even Friday yet. An interesting look, anyways, for the retail space going into what should be a slower period. I want to talk about the summer coming up here. We had a great question from a viewer that I want to run by you in a second, but let's talk about the idea of being short in this market because the move to the downside continues. We had an attempt at a bounce to start the week, and in a bear market, Neil and I were having this conversation earlier, in a bear market, those bounces get sold, and now we're seeing that. We're right back to lows here. So what do you need to see here? I mean, you've been on the short bandwagon, all since the start of the year, essentially. What do you need to see here to get off of that?
I just haven't seen any follow through and I haven't seen any buying. And I mean, I was listening to Sean before I came on and he was trading AMD. And, I think that's a great idea coming in and trading AMD when you do get these little bounces. But for what I would need to see is really more than one day. I would have to have at least 2, if not 3 days of follow through. I would need to have volume coming in to the major large cap stocks, Apple, Microsoft. I know that NVIDIA and AMD definitely have had some upwards price action, but it's pretty much faded almost immediately. So I would need to see more regular buying, more volume buying in the large cap stocks. I would even need to see some of the stocks that have gotten trashed start to, at the very minimum, hold the lows and stop just completely bleeding. But I mean, at this juncture, I'm a swing trader too. So, I'm staying on the short side until further notice. And it's probably going to have to be the Fed that does something major to change this situation.
Okay, I want to get your take here on what we're kind of expecting to be another, slow summer period. Had a great question from a viewer, as I mentioned, talking about specifically for options and options trading. I mean, in equity markets, we always see, volatility kind of die down and things go away as June, July, August approach and come and go. What do you do from the options side of things in those conditions, in that summer trading period?
So, normally we do look for the summer to calm down, right? It's quiet. All the hedge fund guys are probably in the Hamptons somewhere. I don't know what happens, but it's usually pretty boring. Normally what I do is I focus on earnings. I start focusing usually around halfway through June into July and the first half of August. I focus primarily on the move into earnings and then trading earnings itself, because as far as direction, there's just normally not as much direction to capture. And so in the options market, you at least know that you have earnings reports coming up. You know that implied volatility goes higher into an earnings report and it falls after earnings. So you can at least use options to trade a change in volatility. Now, this year, going into midterms and being in a bear market, I mean, if we get a quiet summer, I'll be surprised, but I think everybody could maybe use a little bit of a break from this craziness. So we'll have to see when we get closer to the time.
Yo, what's up? Yeah, we know you have to go, Danielle. I was just messaging. Is she going to come over to me or what? Thank you again for coming through here. I just want to give a quick update to people. GameStop did touch that 102. That was an area that we maybe should have got out of. All right, I know you got to go, Danielle, so I'm going to ask you about Costco. No worries. Okay, well, now that's tempting now. You know what? I know the market's in trouble because when Brendan asked you what to look for, you did the same thing my wife did whenever I ask her questions. She did the eye roll. You did the eye roll there. So I know that the market still has a little bit of trouble to go here on that one. I saw you on another station. I can't remember what it is. Not as popular as this one. And you were doing something called Trade or No Trade. And what I wanted to ask you is Costco. trade or no trade? Because right now, Costco, I mean, I have the daily chart up right now, and this is a name that I'm actually not even in yet. And if we look at it here, like what a destruction has been done to a name that I consider like almost a staple in anyone's longer term investment portfolio, especially if you're light on the retail side. What do we think about Costco here ahead of what's going to come for their earnings call? Is this a position that maybe because it's so far down, is this something that you would buy maybe right now? Or is Costco something that you would again wait for earnings and then assess it at that point? Is it at a nibble spot for you? What's up with Costco?
Sean, I have to tell you, this move in staples is just completely insane because I mean, it's the safety spot, right? Or at least it's supposed to be. I love Costco just like you. I really don't see an options trade in it here or a short-term trade just because I feel like a lot of this move has been made based on what happened to Walmart and Target. And, hey, Costco might be completely fine when it comes to earnings. So I'm not going to trade it prior to earnings, but I actually was looking at this chart and thinking, okay, this is one of the few charts that I do want to start picking up long-term shares on. Because, I mean, even though we've seen this destruction, the NASDAQ's down almost 30%. I mean, this is the spot where you have to be looking for things for a long-term portfolio. And Costco's one of the ones that takes the cake for me. So I was actually going to use this opportunity to pick up more long-term shares.
Yeah, I think that's the same thing. Look what I have here on the desk. So Kirkland, the cashews, the mixed nuts. Yes. We got the men's vitamins right here. So we were actually there this week. And not only that, but here in Canada, I'm sure it's similar where you are as well, gas prices. I mean, what in the... So I don't actually mind waiting that 5 or 10 minutes in the Costco gas line to fill up a little bit. Any thoughts on energy as well?
So, my thing with energy is that it's been so extended all year and it's been so crowded, just like consumer staples. And I mean, what happened to consumer staples this week is really not something that is supposed to happen in a quote unquote safe area. And when you're looking at energy, I mean, that's kind of the last remaining place where it's actually going higher. So I have actually stepped back from trading energy for the last month because I just feel like even though gas prices are higher and, it is based on a macro situation, I just feel like the reckoning is coming for energy because it's the last spot where people feel safe. And, if we end up capitulating here, which is still what has not happened, we've had a slow bleed. We haven't had capitulation. It'll hit energy too. So long-term stocks, I think, are fine, but I'm not going to be trading this to the upside on a short-term basis right here.
You said the word capitulation, and that's worth a bang right there, as we like stocks and industries that capitulate. Danielle, Shay, thank you so much. We know you're short on time a little bit here. Great topics, great talk, and as you already know, it's my favorite segment. I'll see you on Twitter at Dan. What is your Twitter handle, actually?
It's at Trader Danielle, Danielle. What happens is all the fakers, They come, they spell it wrong, they add a weird number, they put a space. So I don't know. Hopefully one of these days Twitter will verify me, but
Samesies. Thank you, Danielle, Shay. Very, very kind of you to come on again once a week, and we definitely appreciate all the content that you bring us.
Thanks for having me. I love it.